What's going on, everybody? My name is Lamont. Been a full-time trader for 6 years now. I head up the futures room and the swing report for the chart guys, of course. And in this week's video, we're going to be looking at some of the ideas that were presented last week, specifically Roku, Oracle, MPC. This week was great for not only did the trade setup work really well in those ideas that we shared last week, which there will be a link to at the end of this video, but also Oracle showed a lot of nuance this week about the setup. It shows you how even when the setup doesn't work, it is working, right? And I'll get more into that in a bit. So without further ado, let us get into it. So the first idea was Roku. So if you are recall from last week, or if you want to check it out, just go to last week's video for the swing pick updates. Roku, what we were saying was you can look for that session to session setup, which I've been, really adamant about being. I think it's the best setup, right? So if you're not sure what that means, the idea is if there's the potential for a lower high to be set, as there was on the 17th, this day, right? This could potentially have been the lower high. On the day after that, if you get an open under this session's point of control, which is where the majority of volume was traded that day, then what you can look to do is, if you don't see these buyers come back up to the point of control and get back over it, then that daily lower high is probably being set. So the goal for the buyers is to get over this POC, right? And they can't do that unless they get over the value area low, right? They can't do that unless they get over this prior low. So when you see an open like this, a move up, the buyers do nothing to negate the change of this gap down, and then you roll back down under the open, that's a go sign, right? Because that's potentially that daily lower high being set, and it certainly was the case this time. So this is only 0.3% risk, right? And if you're just looking to get to just here, just the low of yesterday, that's a 2.75 R multiple trade. You can throw your whole account at this amount of risk and you'll be totally fine. Most I don't know any traders who operate, less than 0.3% risk. Like you can literally throw your entire account at it, so that's that. And then your next profit taken would be these lows here. So your next chop would be like this. So you're looking at a, 2.7 and then a 6.75 R multiple trade on this thing. And the key to this is just context. The context of which was laid out last week. Let value move higher for a few sessions. As long as you're still looking for a potential daily lower high, this setup makes sense. Okay, so Roku worked out beautifully. And again, there will be a link to last week's setup if you want to see this, the plan laid out beforehand. And now let's move on to Oracle. Oracle, because it did not give us such an easy time, it provides us with a lot of lessons, though. It shows the nuance of this setup. As I was saying, even when it doesn't work, it's kind of working, right? Because if you look at it from here, this perspective here, all right. So last week, we closed here. And what we wanted to see was another lower high to be set under 110.92. So I'll just drop a hard yellow line there so that we can recall, what the deal is, right? So we wanted to look for a potential lower high there. So what we wanted to see then on Monday, is value move higher for a few sessions, and then we'll look for that potential lower high if there's an open under the prior day session, right? So that's the session to session set under the point of control of the prior day session. So let's say then, I'll do a side by side so it's easier to see this time around. All right, so on the Tuesday, let's see, we'll start off with Monday the 16th. Monday the 16th is here. So value did move higher, right? And so then the next session, you have a big old move down. It's actually a gap down, right? That gets filled though, right? So we still can look for that same exact trade. So let me just zoom in and show you what that looks like. So that's this day here on the 17th. This day, right? You had the potential of having this be the new daily lower high because this high is above this high here, right? And we did have the right context for it. We had an open under the prior day's point of control. It does not stick, but let me show you how it shakes out. So that's this day here, right? And because you have the open way under the point of control from yesterday, this is what that open looks like, okay? And you sell the pass back down under the open, you have next to no risk. Even if you get like an imperfect fill, you have next to no risk on this. your first target would be this 107.37. Why? Because that's just this low over here. That would just be this prior high, excuse me, right? So if these sellers are going to press the issue from here and set that daily lower high, they should be trying to get back here first, right? That's how they can negate this change. So then if we zoom back into that day, what you'll see is your first profit taking, right, is pretty reasonable, and then you stop out the rest. Even if you took no profit, if you took this attempt here, sold under the open, and then stopped out here, you took a 0.07% hit. It's nothing, right? You will not feel that, right? And so, okay, fine. Back to the drawing board. That one didn't stick. All right, we'll try it again the next time that opportunity presents itself. So then you see a daily move up, right? And this high now has potential to be the lower high again, right? Because this high is above this day's high. So now this guy might be the daily lower high. Okay, so then on this session, on the 18th, do we get an open under this session's point of control? If we do, that's the setup again. We should try again, right? Because we've only taken a 0.07% hit. It literally means it's nothing, right? So we go back again to the 18th. Oops, we don't even need that. So we'll go back to the 18th here, right? So the 18th is over here, okay? So we'll try that same exact trade. We'll look for the same exact target, that same exact area, that same exact low or prior high. And you see this move up. Here, let me just turn on the session to session here. Okay, so here's your open. Here, I gotta remove this. Okay, so here's our open, right? We move higher. We do not take out the point of control, right? We stall right here at the value area low. So that has the potential then to set this as the daily lower high, 109.79, right? Has the potential to be that lower high. Okay, so we sell this pass back down under the open. We do, let's say we don't get any profit taking. Again, let's just assume we don't. Whatever, we didn't trade it well, or I mean, we never got a one arm multiple chop anyway. So let's just say we take a full stop, 0.35%. A lot of traders now would think, okay, I've made this attempt twice now, right? And well, it hasn't worked twice. I don't love taking a loss, right? I don't love taking losses, but you have to keep a good perspective, right? Think about how many times in the prior videos this setup has already offered multiple percent gains, right? So taking a loss at 0.07% and then taking another one at 0.35%, so a third of a percent, well, a little bit more than a third of a percent. Okay, that's the cost of doing business. This setup is still working. Why? Because this is a very asymmetrical setup. The point of the setup is not that it will work every time. The point of the setup is that when it works, it will work really well. When it doesn't work, it will not cause a lot of damage. That's the idea, right? You're just trying to stay on the right side of these asymmetrical scenarios. You see what I'm saying? So then let's carry on. Okay, and so now, okay, we got stopped out again on this day, but then on this session, do you have an opportunity to set that lower high with an open under this session's point of control? You don't, because the open is here. And the open, if the open is going to be here, and the body of this candle is here, I know for sure that on the 19th, that setup does not present itself, right? So on the 19th, we're over here, and we have an open above the point of control. So that's not the sellers being positioned well. We move down, and they actually hold the point of control as support into a little bit of a rally. Now, here is when the trade gets back to working for us in a quite a good way, right? So if you continue to stick with this idea, because the context is still there. So when you have a trade, you have a trade thesis, and you also have trade oh, excuse me, that's my dog. She's a senior dog, and sometimes she has issues with her sinuses. Sorry about that. What was I saying? So now the trades start. Okay, so there's a thesis and a context, right? So your thesis would be like a punch, right? Like you think that, that a hook is going to land, right? The context is how what circumstances are you going to throw that hook, right? So for example, is your opponent's back against the wall or the fence or whatever? If so, you probably have an increased probability, right? That's a certain amount of context. Are you tired? Are they tired? Do you have a strength advantage? Do you have a speed advantage, right? Are you going to throw a feint? Are you going to throw the cross after a jab or something, right? These are all different elements of context, right? And so the thesis remains the same. and you can look to use that thesis over and over again as long as the context is present. And so in this situation, what is the context? The context is, okay, now this is potentially going to be a lower high, right? Technically, it's a little bit of a higher high over this, but it's just a little rinky-dink one. The idea is that this can be a high under this high, right? The idea then being that if we do happen to continue to press down here, that would likely be a major high, right? I don't really care about these little rinky-dink breaks. To me, this is just one move up. Why? Because the value is still moving higher. Or it's really just going sideways, honestly. So it's just choppiness. And the idea then is, okay, well, if these buyers are not going to close this gap and instead they roll back down under the open, that high is likely going to be secure in the near term. And if they do roll under, we should look for those same exact targets. It should be that day's low and then the lows of this balance area over here. So then if we zoom into this, the Friday session, and you look at it, okay, well, certainly we have to be under the point of control because it's a gap down. So the goal for the buyers then on a gap down situation, right, is to fill the gap. And so if they don't fill the gap and they can't even come back into the prior day's range, and then you roll back down under the open, that's the go sign for the sellers. So on this day, this open setup here, right, you have 0.05% risk. So again, you can throw your entire account at this just to get to your first chop, which is just that day's low. Right? This first dashed line is just the low of this day. Okay, so here's our trade zone in here. Okay, so even just getting to the first profit taking area, right, is a 15.8 R multiple trade, right? And then to get to the next one is a 68 multiple trade. That's 3%, right? So think about that, right? This one leg of the trade will more than make up for the 0.07% and the 0.35% losses on these attempts before. You see what I'm saying? So this setup, because it's so asymmetrical, you can fire away at it, assuming the context is appropriate for it, and you are not taking what that's the ideal situation. Like if you're gonna be wrong, don't be wrong in a big way, right? It's fine to be wrong, just don't stay wrong and don't be very wrong, right? You know what I mean? So that is it. That's pretty much it for. So anyway, Oracle, another goodie for the session to session setup, assuming you have a good sense of the context, right? Because that, I would say this is, actually, if we also, oh no. Yeah. Anyway, so that's Oracle, and just a little bit of nuance, right? It shows you that, because I don't want to present it as if, okay, this setup just always works. No, that's not the idea. We don't look for something that always works. We look for something that when it works really well, and when it doesn't work, no big deal. Okay. So finally, we have MPC. And so MPC, we were talking about that setup as well, right? And we were thinking, okay, well, as long as it's under here, then you probably have a good shot of coming back here. Now, that setup did not present itself until Friday. They just continued to move value higher. So that's that. And at this point now, there's so much space for a higher low that it's kind of an aggressive sell. This is what, like I was saying last week, it's one of the strongest assets in the market. And so, that's why it wasn't an official call, because we typically will look to pick on relative weak names for sells. Now, that being said, if we look at the session to session, I don't believe there were any setups on this entire way up looking for that high to be set last week. That was 1, 2, 3, 4, 5. Here was one, right? But think about that. If you sold this pass back at under the open, you stop out like right away. Again, there's no risk on it. You see what I'm saying? So then you wait for the next time that has the potential to happen, and it doesn't happen until this day, and the open is here. So you have this open, it moves higher, it rejects back down, it's aggressive, but if you sell this pass back under the open, this is your 1R multiple chop is right here, which is pretty much exactly where the first target would be. Oops. I don't know if you can hear that rain, it's really coming down. Right? This is a 1.28R multiple just to get to the next very reasonable target, the point of control of this day that hasn't been tested, right? So I wouldn't have done it because it's Friday. Like I probably wouldn't be in a full position at all if it closed like that, because you never know what's going to happen. But the idea is it works, right? You could have very easily done this trade. And if you know that your win rate is better than 50%, a 1.28R multiple is no problem for you, right? This can be your entire trade. You know what I mean? So anyway, that is it. So I hope that was valuable regarding particularly Oracle. Like Oracle was really great for showing nuance in the setup this week, right? you should not expect it to always be perfect, right? And there are some exceptions, right? Because again, for Oracle, technically that was a daily higher high where that setup presented itself, but you have to be open to that idea, right? Because, well, it's a massive gap down, right? So whenever there's a gap, there's opportunity, right? There's irregular opportunity. It's not the gap is not the more common situation. And if you ever fail the gap and then you pass right back down under the open, and it goes both ways. If you gap up, you move down under the open, incomplete gap fill, pass back over the open, that's a buy, right? That's a very common play, right? Even here, right? You gap up, here's the open, you gap up, incomplete gap, you buy that pass back over the open, and there's plenty of follow through on that because that's the goal for the sellers. The sellers have to close that in order to start, even just to start negating the change. And so if they can't do that, the other team is going to step in. All right, so that's pretty much it. If you want to compare what I said here with what I said last week, just go ahead and hang around, click that video where my face currently is right now. And if you wouldn't mind giving us a like and a subscribe, we would very much appreciate that if you haven't already. Otherwise, I hope to see y'all soon. Farewell.